the other side of the Metcalfe's law equation. You build the applications layer on top. Then you've got real value and staying power. And you capture attention, because this is all an attention game. And if not, you lose attention. But as you say, if you're using it, the reason Doge has got so much attention is there's one day a very high probability Elon will integrate it into X. We all know it. Right. And we're just waiting for it.
Yep. That's right.
And so therefore, we know the applications layer could be enormous when it happens.
That's right. And look, I mean, eventually, look, Dogecoin is on, I don't even know how many exchanges. You can buy it on Coinbase and Robinhood and et cetera. There's Coinbase is launching Dogecoin futures, right? So, if this was just a joke and people that want to kind of push this aside, like, I don't know, you're going to have people trading this stuff. You're going to have people building stuff on top of it. It's probably worth paying attention to. And I have run into this argument as well of like, well, you're just kind of gambling and speculating. And I'm like, well, look, I don't think 0 day to expiry options were set up as a hedging tool, were they? I mean, let's be honest. The majority of those options contracts are traded by retail. And why are they trading them? It's cheap leverage, right? And so I don't want us to kind of get in this disingenuous argument that trading meme coins is somehow, beneath an investment manager or trader. And in fact, it's one of the reasons why you have these kind of outsized returns if you can manage your risk appropriately with them. Would I be launching a meme coin only fund? Absolutely not. Do I want to have it included in my portfolio? Absolutely.
Enjoy this clip? Well, come and join me on The Journeyman, my YouTube channel. Subscribe there for more of this as soon as it comes out. I'll see you there. So let's look forward a bit. What are you excited? How do you think the cycle plays out? Where we are? I'm not going to ask for price predictions or anything of that shit because I hate it. But just kind of the structure of the cycle to you and what might be the next layer of kindling within this, or something unexpected that's going to come along.
Yeah, well, I love that you kind of skirted the price target issue, because when people ask me that, my response is a meme, which is higher. That's always my response to a price target, right? It's always going higher.
Yeah, nobody's got a crystal ball, so we're just drawing lines on a chart, guessing it. It's
like, come on, could it? Right. And so, we could probably have a whole discussion on price targets and how meaningless they are. But look, I'll put it to you this way, right? So, I'm wearing a bonk hoodie. I run a crypto fund, but we are actually a macro shop disguised as a crypto fund. My trading partner has 20 plus year experience.
Everything is macro.
Exactly. And so he was at Brevin Howard for years, Lehman City, et cetera, a lot of macro experience in-house. I have some macro experience. He has a ton. And our view really is if you get the macro right, you get the crypto right. In 2022, we were bearish. When we launched the fund, we were bearish. We were pretty dark. And you can read this in our reports back then. We were actually short heading into Q4 and got long in late December. And have a long bias now, even with, the pullbacks in the markets that we've experienced in April and even, the past couple of days here in May. We have a structurally long bias heading into next year. And there's a couple of reasons for that. One is, as we look at the broader macroeconomic picture, we think we do see rate cuts later this year. If you kind of take the inverse correlation of, say, consumer confidence and rate cuts priced in the curve, they're inversely correlated. Well, if you saw Starbucks' earnings recently, you saw the note from the CEO of McDonald's, the consumer is slowing down. You saw the JOLTS data today. Job openings are kind of starting to pull back a bit. We see the employment data as actually most important as it relates to when the Fed can actually enable their easing program. Now, they announced that they were dropping 60 to 25 bips in QT starting in June. I don't think that was consensus. I think people expected a schedule 60 to 40. Right, something that stepped down gradually. That's a big shift. That's more than 50% off the balance sheet of what they were rolling off. That's material from our perspective, right? So, look, I think, and we have the election year, so you can put your tinfoil hat on whether you'd like it or not, but it's an election year, right? And so our view continues to be that we thought Q1 was going to be a boomer. We saw that. We saw it driven by flows. We saw it with the ETF news. Guess what? Past 5 sessions in a row as we speak today, 0 inflows from BlackRock. What happened to Bitcoin's price? Went straight down. Guess what happens when those flows come back, right? It's not that difficult. The second thing that I think we tend to look at as it relates to later this year and how this eventually applies to crypto is global liquidity. So I'm sure you're familiar with the guys at Cross Border Capital. I love those guys. I love the way that they think about global liquidity. It's not just Fed balance sheet. It's the Fed. It's the Chinese bank. It's shadow monetary policy.
For Global Macro Investor, we built out a massive suite of stuff. That's what got us the low in 2022. Everything, just global liquidity.
Exactly. October.
All we do, really, for this.
Exactly. Yeah. And so we track global liquidity pretty extensively. And it's been drying up the past month. Well, look what happened, right? And so do we think we're at a cyclical top as it relates to global liquidity? Absolutely not. We don't think that happens till later in 2025. And if liquidity is going to be the thing that continues to drive risk assets, well, what's furthest out on the curve? Crypto. And so as we look at, the run-up that we had in Q1, the digestion of the distribution period we're in right now in Q2 historically is the worst performing quarter for Bitcoin. We've taken a defensive stance. We booked a bunch of profits at the end of Q1, thankfully. We like certain levels that we want to be getting long at. We think that with the election, cuts coming in the second half of the year, as well as an improvement in overall global liquidity, that we're going to have a boomer second half of the year, certainly Q4. And so from an investment standpoint, we think crypto does extremely well. Price targets, whatever, you got Evercore to 115K